with my clients, what I try and say to them is just get in there. Just you don't have to. Sure, it's volatile. I get it. And get in there. And they say, how much should I put in? And what I always say is, well, you should put in what you know that if it goes down 50%, your initial reaction will be, I want to buy more, not, oh, I made a mistake and I'm going to sell it. And I think that's one thing sometimes Bitcoiners forget is that we have to mention the people we're orange pilling. We've got to explain to them how this works and what's happened in the past. And that could happen again. Now, going down 50% from 500 to 250, well, okay, big deal. But, if you bought it at 500, you might feel bad about it, right? So that's kind of what I see going on.
Hey guys, welcome to Everyday Finance. The attention that Larry Lepard is dedicating to Bitcoin and sound money comes at a time when the political climate is unusually turbulent. The executive order issued by President Trump to rename the Department of Defense to the Department of War has sparked a heated controversy among lawmakers and the general public. Critics view it as an expensive distraction from military families and diplomacy, while supporters, including Defense Secretary Pete Hegseth, characterize it as celebrating a warrior spirit. Supporters of the measure emphasize the warrior ethos. The move, in addition to its symbolic significance, adds gasoline to an already nervous market environment, which is characterized by a strong level of global uncertainty and investors looking for safe haven sites.
I mean, if you asked us 2 years ago and you said all these things were going to happen, we're going to have a pro-Bitcoin administration, we're going to have a strategic reserve, we're going to have people in the White House talking about Bitcoin, the president's going to speak at a conference. I mean, it's unbelievable what's going on, and it's all positive, obviously, for Bitcoin. The treasury companies are a huge positive for Bitcoin. We really, I mean, I think Saylor at one of his speeches a year ago said something along the lines, we're crossing the tipping point, where, we're kind of at the 10%, and it's going to be a gold rush here for the next 10 years as everybody comes to realize they need this asset. And that's really kind of what I see going on. I mean, I think that we've got a very, very bright few years ahead of us. And I think in terms of the 4-year cycle, we're not through with this one. I'm very confident we're going to hit 150 this year and probably, 200s, maybe 300s next year. Hard to tell where the top will be. And of course, at that point, people will be overextended. There'll be some leverage used and maybe we'll have a correction. But, it's extremely bullish what's going on. And, if you can stomach the possible volatility in the future, you should be buying it like crazy right here because I believe in the power law and other models. I think we'll break it to the upside eventually, but we're going to be at $1 million a coin in the early 30s in my view. So that makes it probably the most asymmetric thing out there with what I consider to be relatively low risk. So it's all good. The conferences are great. I mean, the Vegas conference was a little hectic and crowded. I was signing a lot of books. I didn't get to go to a lot of the sessions, but it was large. Prague was fantastic. That's a really well-run show. Highly recommend that to anybody. It's a beautiful city, and it's kind of the right scale. The Vegas scale is just so big. It's so noisy, especially with the politicians coming. I mean, you get locked out. And the morning when Vance was speaking, I stood in a crowd of people for an hour and a half, not able to move. So, but I think, the world is waking up to it, and the conferences show that. And, it's like I say, it's all good. I'm just incredibly bullish about what's going on. I think that, we're now at the stage where TradFi is actually being forced to reckon with this. I mean, they just can't ignore it any longer. I mean, when it keeps making new all-time highs, I remember when it was at 15,000 and all my TradFi friends were like, see, we told you it's dead. I was like, no, it's not. This is an unbelievable buying opportunity. They didn't listen. And I mean, when will they, everyone wakes up at their own pace, right? I mean, and sadly what will happen here, Tim, I can see it. I was talking to somebody about this yesterday is, we'll squirt up to 300 or 350 and then somebody will wake up and buy it. And then we'll have a 30 or 40% correction, which will take it down to 200, and they'll think, oh my God, what have I done? And it's a funny asset. You have to understand the nature of the volatility. You have to understand the implications of where it's going long term. And I think that's the hardest thing for TradFi to get their arms around, that you can actually have an asset that can go up forever and not be overvalued. I mean, in traditional TradFi, something goes up a lot, it tends to get outside of its metrics and measurements, and it becomes overvalued. I mean, just by its very nature. And so, that's kind of a traditional way of looking at assets, and I get it. However, In this particular case, this is a new and different asset. It's something really unique that's never existed before, which is absolute digital scarcity. And as a result of that, it can go up forever. and most people just can't grok that, and that's why, Saylor says, hey, it's going up forever, Laura. People think he's joking, but he's not. I mean, people think he's nuts, but he's not. He's dead ass serious. I mean, it is Manhattan real estate. There's only so much of it. It's the soundest money ever created, and it's a new and better form of money. And therefore, there really is no top to the price. So it's hard for people to understand that. The biggest thing I used to be fighting, Tim, was, in my libertarian group friends and everybody else, well, the government's going to kill this, right? They're going to regulate, they're going to tax it, they're going to shut it down. Look at Elizabeth Warren, blah, blah, blah. Well, then the ETF came out, and it's kind of like, well, that argument kind of fell away. Then the president endorsed it, that kind of fell away. Then the strategic Bitcoin reserve got talked about, that kind of fell away. Now the big argument is, well, I'm too late. I can't, you bought it for 10 or 20 or 400, whatever, when I started. I can't pay 120 for this. It's nuts, and I'm like, well, yeah, you can, because if it's going to $1 million or 5 or 10, which it is over longer periods of time, you need to buy it now. And the analogy I use often is, I say, the fiat world, and the book talks about this. The fiat world, fiat itself is destined to fail. And if you kind of assume fiat currencies are kind of like the Titanic, and gold and Bitcoin are seats on a lifeboat outside of the Titanic because they're currencies that the government can't print. I bought my seats cheaper. I was buying gold at 300, 500, 1,000, 800, all these lower numbers, and I bought some Bitcoin at 400. But the seat's still available, and the seat's bid to you 120. Do you want the seat? Or do you want to stay on the Titanic? Pick one. I mean, so. I think it's hard, but it's hard. I get it. I get that it's hard for people, but with my clients, what I try and say to them is just get in there. Just you don't have to. Sure, it's volatile. I get it. And get in there. And they say, how much should I put in? And what I always say is, well, you should put in what you know that if it goes down 50%, your initial reaction will be, I want to buy more, not, oh, I made a mistake and I'm going to sell it. And I think that's one thing sometimes Bitcoiners forget is that we have to mention the people we're orange pilling. We've got to explain to them how this works and what's happened in the past. And that could happen again. Now, going down 50% from 500 to 250, well, okay, big deal. But, if you bought it at 500, you might feel bad about it, right? So that's kind of what I see going on.
It is very difficult to predict when Bitcoin and Ethereum will be released. Historically speaking, September has been one of the weakest months for Bitcoin. And new political noise is contributing to the volatility of the cryptocurrency. Currently, Bitcoin is attempting to break past barrier and is hanging above $11,651. This is a modest increase on the day, but a decrease of 2.2% for the month. This is despite the fact that there has been a significant amount of money invested in Ethereum-based goods. Now, everyone's attention is focused on the meeting that will take place in the middle of September at the Federal Reserve, where a possible reduction in interest rates could give additional liquidity. The cryptocurrency market will continue to be mired in the cross-currents of uncertainty and speculation until then.
It's based on the ARR, the average rate of return per year, and that's been coming down over time. I mean, it was higher in the past because it was earlier in the adoption cycle. From what I've read and what I hear, I believe kind of the ARR now is somewhere in the mid-40s. I don't know, it could be higher, it could be lower, depends on what point you measure to and from. And that will come down over time. And I think, Saylor projects it out in the future, it'll get closer to 20. But if you take that, 40 some odd percent rate today and you slowly shrink it over time and you let it compound for a bunch of years, I mean, that his big number it's quite a ways out there. I want to say it's 2040 or maybe even a little later. So, it's not overnight. And I think the power law, which there's a great chart in there that Fred Krueger did that I put in my book that talks about kind of the power law. It gives you some boundaries of, and look, that it's not a perfect model and it will be broken to the upside, but for now, it's all we have. And looking backwards, it's got a, 90 some odd percent R-squared correlation with what happened. And so to me, that's as good a model as any. And, there's an average value of Bitcoin as it grows over time. And then, of course, it swings around that. Sometimes it gets over exuberant, and sometimes it gets, too depressed. I mean, after Sam Bankman-Fried, it was way below the power law model. And so the way I kind of look at this is I kind of look at it similar to, there's a site on Twitter. It's called the Meyer multiple, the Tip Meyer multiple, I think is the Twitter handle for it. And it kind of shows you the price of Bitcoin compared to the 200-day moving average. And if you look at it, through most of its life, it's been within kind of one standard deviation band of the 200-day moving average. The 200-day moving average now, I believe, is around 100K, somewhere plus or minus. And, and it hasn't spent a lot of time over 2x the moving average, but it's spent some time. I mean, in big runs, it'll go 3, 4x the moving average. So what that tells you is that in this run, we could get to 300,000 or 400,000 a coin. But over 200,000 a coin, you're in rarefied air. The percentage of time it's been up there has been low. So, but as I said earlier, I think the power law is going to break to the upside, because at some point in time, what's going to happen is Gresham's law is going to kick in a massive way, and everyone's going to realize they're in a theater with a fire, and the fire is burning fiat, and they're going to want out, and they're going to do it all at once. And so it's going to be like Silicon Valley Bank. I mean, one day it was sound, then they sold some bonds, some people ran some numbers, everyone said, holy shit, this thing's not sound. They lost $42 billion of deposits in one day. And so if the government were to undertake policies, I mean, if say a blue administration were to win, Stephanie Kelton were to be Treasury Secretary, they promised UBI to everything and everybody and massive debt forgiveness, and they're going to cover it with printed money. Well, Bitcoin would go through $2 million a coin, in months. So, I'm not saying any of that's going to happen, but the point I'm making is that the power law is kind of based on what I consider to be somewhat stable conditions. And at some point, this thing could become unstable as you look, and my book talks about this a lot, as you look about how other economies unwound, whether it be Venezuela or Weimar Germany or Zimbabwe or, other hyperinflations. When a quorum of the people in a country come to the conclusion that they can never stop printing money and the currency is fucked, then they all dash to get out of it at once. And at that point in time, you've got real fear. And so people won't be saying, is this price too high? They'll just be saying, get me some, and that the same is true with gold. I mean, gold will go through 10,000. So, so that's kind of, now, is that going to happen anytime soon? Probably not. But is it a tail case out there? Absolutely. Especially depends on how crazy our government gets. I mean, they should be trying to balance the budget, but you can see they tried that, and Doge didn't exactly work. Elon's gone, Vivek's gone, and the big beautiful bill passed, and the only two fiscal conservatives in Congress got lambasted by Trump. I mean, Massey and Rand Paul, and Bessent pivoted and said, okay, we got a lot of debt, but we're going to grow our way out of it. Well, okay, I know what that means. They're going to grow their way out of it by printing the money, and we're going to have inflation. So, I mean, it really is. I'm incredibly bulled up, Tim, in terms of where we are in this cycle right now. I mean, we're about to make a lot of money, and the world's about to understand what we all know, and that's really going to be pretty transformative, because it's still a small percentage of us that really understand this. So in my case, what happened was I was, I guess I started, it took me about 6 months to write the book. And it started with some watching some political event or conversation on something on TV that my wife dragged me into. And they're all arguing about a bunch of stupid stuff. And I was just like, I was so frustrated. I was like, nobody's really talking about the primary issue that's going on in this fourth turning, which is the money is failing. And so, and I mean, obviously Safe talked about it, and Lynn's book is excellent and talked about it, but, they're the kind of books that you give them away and people don't read them because they're pretty scholarly, and they're better than mine in terms of scholarship, but they're not easy to read. And so I thought to myself, God, somebody's got to explain this, and I understand it really well. Maybe I'll try and write a book about it. And so talk about, and bring in my personal stories and all that kind of stuff, and show some warts so that people realize that I'm real. And the thought pattern behind that was just, people don't, they don't read textbooks. They watch Real Housewives, which is stupid, but, they want a human being behind it. They want a story behind it. So I kind of try to weave it all together in a format that, somebody would get intrigued with. And the opening scene in the book is kind of, shows a case where I took on some pretty powerful people and, kind of got hammered for doing it. But I felt like it's important to do. And I, hopefully what I try and do there is set the hook, like, holy shit, who's this guy all about? I got to read this, see what he has to say. The way I did it was I'm an early morning person, so I would get up at 4 or 5 in the morning and start writing. And then I go to work out. I come back from workout and I'd keep writing. And usually by about 2 o'clock, I'd be shot. And then I would do my regular business and other stuff, and maybe take a nap, whatever I needed to do. But and I got more and more obsessed with it. At first, I was like, well, I'm not sure if this is going to turn into anything. I'm not sure if it's good enough. I'm not sure I can really make it a book. But as time went by, I became obsessed with, like, yes, I've got to get this done. And I felt like there was kind of a higher power guiding me to do it. I mean, I really had all kinds of really serendipitous positive things happen. I mean, one of which was an editor showed up, a woman named Mel Schilling, showed up in my life and just kind of said, hey, I'm a Bitcoin person and I really believe what you're doing, and can I look at your book? And I looked at it and she made some comments. I was like, holy shit. The book's pretty well written, and honestly, I can't write that well. I mean, the ideas are mine, the message is mine, it's in my language, but she really cleaned it up a lot. So, if you're going to write a book and try and get it published, I highly recommend getting a good editor, because no matter how brilliant you are, how good you are, other people can see different things that you can't see, and they can make it more explainable to folks. And there's a lot of I've always journaled, and there's a lot of argument for journaling. I think in general, just kind of writing down your thoughts is helpful. It kind of releases them and allows you to, then come back and see what you were thinking at any given point in time. So,
in the meantime, MicroStrategy, a firm that focuses on Bitcoin and is owned by Michael Saylor, is generating news for something that did not occur. It was excluded from the S&P 500 during the most recent rebalancing transaction. Its erratic earnings prevented it from achieving the profitability condition of the index. Despite the fact that it held more than 636,000 BTC in its treasury, which was by far the largest institutional hoard, due solely to fluctuations in the price of Bitcoin. The company has experienced a dramatic shift from a profit of $10 billion in one quarter to a loss of $4.2 billion in another quarter. In spite of the fact that Saylor maintains that MicroStrategy has outperformed the S&P itself, the omission highlights the uncomfortable fit that exists between crypto-driven companies and traditional financial benchmarks. The next opportunity for inclusion will be in December, which will ensure that the discussion continues.